Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets, they have extended the rally early this morning.
One of the main reasons why we are not seeing the kind of growth that we would love to see is, of course, the fact that even today we are not seeing the investment piece of the thing coming in.
The mid-cap index has been making new highs even before the bigger indices.
So inflation looking very, very subdued, and that certainly is another important factor, not just for the US market, but also for the Indian market.
I think the structure of the economy is changing. I think the growth is coming from various other forms as well, and not just the large capital investment.
This is a very, very strong start to the markets, you will have to say. 36 points high. Okay, now cooling off, 1042 as we speak.
We have enough capacity. We are meeting that requirement, and as of now, there is no shortage in the system.
Most of the businesses which are attractive to us, they are still not extremely cheap or reasonable on the valuation framework. What is cheap today is one which people are a bit scared also about.
Unit 2 as well as Unit 1 are expected to be re-inspected by the US FDA.
The entire rate review mechanism in the council is going to be far more scientific. 3 to 4 months is the timeline they're looking at reviewing of rates. And the other essential point that we need to keep in mind is also the schedule for filing of returns has moved ahead.
I mean, the market seems to be doing just fine, although it has plateaued out. I mean, even at 11:30, we had about a 50-odd point gain in the Nifty. It's not moved since. We're still up about 0.5% or so.
Yeah, but 0.5% is something the bulls would take. In fact, now inching closer to 2/3 of 1% on the Nifty. 10,068 is what we have. Easily been a bit of a trend move on the Nifty today. This is Closing Bell. I'm Anuj with Ms. Surabhi. Has to be good afternoon.
Good afternoon, Anuj. And I guess, I mean, on a day when we're doing slightly better than most of the global markets, as you're saying, I totally take that point that at 10,000 to have this kind of a move, any issues, any complaints whatsoever, or is this really good performance?
You know, today is actually even better than yesterday. Surabhi, yesterday we had one stock which, you know, really propelled the market, and the Bank Nifty. Today it's across the board. Market breadth today is quite positive. It's a higher high that the Nifty has made now after making a higher low. So it's sort of confirmed your overall, breakout that we've been discussing for last 2 or 3 days now. Multiple stocks have led the market move today. You can't pinpoint a single stock. Okay, yes, maybe Tata Motors has surged, but you can't really say that one particular stock has accounted for, lion's share of gains. I think that's something that the market would like. So all around buying. And look at the cash market volumes today. It's interesting. I don't know where the buying is coming in from. My guess is that the DI buying should continue, but let's wait for FI number as well. But phenomenal the way the market has moved today.
Okay, well, we've got an interesting one last hour lined up ahead. Here's a look at the top stories on Dalal Street this afternoon. The market trades at the day's high, with the frontline indices gaining over 0.5% each. The Nifty sustains above the 10,000 mark. The mid-cap index outperforms. Tata Steel, one of the top gainers of the day, boosted by the resolution of the pension liabilities at the UK unit. Attention now shifts to the potential merger with Thyssenkrupp. Divi's Labs jumps as sources tell CNBC TV18 that its Unit 2 is getting re-inspected by the US regulator. Unit 2 has an import alert issued to it by the US FDA since March 2017. The Central Electricity Authority terms the recent rise in merchant tariff rates as temporary. Speaking to CNBC TV18, CEA chairman says he's hopeful of a recovery in the second half.
Okay, how should you position yourself in this last hour of trade? Ashwini Gujral and Mitesh Thakkar now join us. Good afternoon. Ashwini, Nifty is making highs of the day. The Bank Nifty is actually not catching up today. Your thoughts on the bit of dichotomy that we have seen today? But it's been a clear trend day for the Nifty for sure. How would you approach the last hour?
Well, chances are Nifty is not being led by Bank Nifty. Yesterday, IndusInd was there, but the rest of the stocks, ICICI Bank, State Bank, 0.5% up. So hardly you can say that the leadership is with the banks. But on the other hand, you have HUL, Larsen Tobro, non-Bank Nifty stocks are possibly leading this move because all sectors are higher. Even the pharma space is up 1.6. So a lot of rear guard action is happening. So for the moment, it remains positive. Sometimes one index will perform at other times, other index will perform, but it's clear that the market from a range is now beginning to expand. So that way, the range expansion continues. As far as individual stocks are concerned, India Cement is a buy with a stop of 186, target of 200. Voltas is a buy with a stop of 548, target of 570. And Escorts is a buy with a stop of 674, target of 700.
Okay, those were the actual 3 interesting movers, Ashwini, that I even noted on my list beyond the Nifty 50. Very interesting moves on those really big mid-caps, if you can call them mid-caps. Mitesh Thakur also with us this afternoon. Mitesh, are you convinced about the kind of moves that we're seeing on the street and your stock ideas?
Yeah, I think I've been pretty positive on the indices. Despite the fact that there was some narrow participation, I think broadly we've managed to get past the 99.80, 99.90 zone. And we should see some upward thrust. I think 10,125, which was the earlier pivot on the intraday charts, I think that could be revisited and most likely, being crossed. So for the time being, we're trading with positive bias. The 2 stock calls that I have are a buy on Muthoot Finance. It's moved up slightly, so try to buy around 513, 514 mark. Keep a stop at 502, look for a 535 kind of target. And Capital First is making a fresh breakout above the 795, 800 zone. So that's a buy with a stop at 784 for targets of 860.
Ashwini, in general, cement has made a big move today. I know you've chosen India Cement, but others have also made a big move today.
Come again?
In general, call on cement. I know you're choosing India Cement right now, but other stocks have also moved up today. So is there a sectoral move in cement?
I think, things like ACC, Ultratech, all of them are moving up. So definitely cement, if you remember, 2 or 3 days back also it had started moving. So definitely cement is one of the leaders in this part of the move. So all of these stocks you can continue to buy in.
Okay, now let's address probably your stock of the day, which is Divi's Labs, up about 10% right now. Ekta will tell us what's going on there. Ekta?
Hi, thanks Anuj. Well, the news is really all around that and sources have told us as well that Unit 2 of the company, which is, has a pending import alert from the US FDA, is getting re-inspected at this point in time. Remember that this particular unit, we did report that the remediation for this particular unit had been completed and the company had re-invited the US FDA for a re-inspection of Unit 2. Now remember that in terms of importance, this particular unit is quite important. It's around 60 to 65% of total sales and 30% of sales are basically to the US markets. The company had received an import alert all the way back in March of 2017 after they received 5 observations, which according to a lot of analysts had pointed to quite severe remediation that they'd need to undertake. Now, however, there was some amount of products which were, exempted from Unit 2, so the total impact on sales was around only 5% odd. Unit 2 was basically inspected also by the Irish and Slovenian regulators earlier in the year in July and August of 2017, and at that point in time there were no critical observations. Plus the company has been in constant contact with the US FDA, and the US FDA had lifted one type of import alert that they had issued on the plant, which was the 9932 import alert, but nonetheless the other one, which is basically with regards to CGMP or good manufacturing practices 6640, was still implemented on the plant. So that still exists until the US FDA communicates otherwise. Unit 1 is also pending a re-inspection from the US FDA. That doesn't have any sort of problems at this point in time. It was last inspected in June of 2014. And all of the corrective actions have been implemented on Unit 1 along with Unit 2 as well. So they're just making sure that Unit 1 would be okay whenever it gets re-inspected. I wouldn't be surprised if it's re-inspected just in the next couple of weeks as well. So let's see what happens and whether the US FDA is happy with the kind of remediation they've undertaken.
Oh yes, Ekta, thanks a lot for that. Today's been actually a bit of a pharma day. So let's see, SP Tulsian of sptulsian.com and Ambarish Baliga now join us. Good afternoon, gentlemen. Mr. Tulsian, thoughts on Divi's Labs? I mean, it's a stock which was, of course, a huge multi-bagger, and then we had all these problems with the US FDA. Do you get a sense that the risk-reward is favorable? And what have you made of this 10% move today?
Sanuj, maybe 10% up move is justified mainly for two reasons. One, on the fundamental reason of the remediation of the both units, seen happening, unit 1 and 2. And if you really see, the stock was under-owned, and quite short-sold. And probably the short covering and also, may have led to this 10% rise. Because if you really take a call on amongst the pharma stocks, you have to be very selective. You just can't generalize and take a renewed buying call on all the stocks. In fact, we have been keeping positive view on 3 pharma stocks only, and that has been our theme. That is Aurobindo Pharma, Glenmark and Divi's Lab, which we have been repeatedly saying in the same pecking order. Actually, our top priority has been on Aurobindo Pharma, with the least on Divi's, but Divi's because of this fundamental news. But I don't think that now at a level of around 800, one should really look into the stock after having run about 10% today. Yeah.
Okay, Amrish Baliga also with us this afternoon. Amrish, thanks for joining in.
Yeah,
so, big surge today and a lot of different parts, particularly the mid-cap market looking extremely excited.
Right.
Manappuram and Muthoot, for instance, I don't know if this is some kind of a, deal impact, the SKS deal impact, or if it's just general buzz. But what's your sense?
Normally, I mean, whenever there's a deal like this, you normally see the deal impact across the sector, and especially with the smaller players. And that's exactly what we are seeing as of now. But I think this deal impact may possibly last for a week or two. And finally, when we know, what sort of merger issue is there, I think at that point of time, again, you will have another impact. But I really don't see these stocks moving up too much more from here, because we have already seen a decent move in most of the financials.
Okay. By the way, a lot of stocks moving now. Auto ancillaries, Bharat Forge has been a really strong stock, so that's moving. But the stock that's surging right now is Exide. Just pull out the intraday chart of that one, Exide, now trading at new intraday high. Mr. Hussain, thoughts here on the stock, Exide?
Which stock, Anuj, you have referred to?
Exide Industries.
Anuj, I have a mild positive or maybe neutral view on Exide, because if you really see, definitely the performance has seen improving. But we have seen that kind of run-up, having taken place in the share price also. We have been keeping extremely positive view on the auto ancillary stocks, and going forward also we have the same view. But maybe on Exide, I don't think that we will be having the positive view going forward from here on.
Okay, Mr. Tulsian, a lot of power stocks are also getting really excited. I don't know, is anything changing materially? I can see some of the Adani Group stocks, Adani transmission and generation alike. Is anything really materially changing, you think?
Seems quite positive on transmission and distribution space, because power generation space, probably because of the spot prices having risen, we are seeing this kind of up move happening. But I don't think whether I don't know how long these spot prices can really seen going up. Because even if you see now the non-availability of the coal, and that has made this, probably once the coal supply gets restored or gets normalized again, you will see the spot prices coming down. But yes, in T&D space there are a lot of ideas, and in fact maybe the companies, those who are supplying the equipment in the T&D space, those are looking quite good. So keeping overall neutral view on the generation space, and more especially on the thermal one. Because I don't think that the things that the prices are seen sustainable, because if you really take a call on Tata Power and Adani Power, both are struggling even on the operating cost level, and both have indicated to exit from their power projects, in Gujarat, that is ultra mega power projects by Adani, by Tata Power, and about 4600 megawatt power projects by Adani Power. So keeping positive on T&D space, but not so much positive on the thermal space on the generation front going forward.
Okay, decent move in Tata Motors. Amrish, any thoughts here on this stock?
No, Tata Motors, in fact, I've been quite positive on it for a while. I mean, especially when we saw that major move below those 400 levels. In fact, I was saying that possibly closer to about 380, one should be looking at buying, and we got a level lower than that. So even at these levels, I think one should look at picking it up, but then don't really expect an immediate move. It could take possibly another 3 or 4 months more, but then I clearly see it again going back to those levels of 440, 460.
Okay, on that note, we take our first break on Closing Bell. The Closing Bell money control question of the day is, FII selling continues in the market. Can mutual fund buying alone take the market to fresh highs? Log on to moneycontrol.com. Tell us what you think, and we'll read out some of the most interesting responses after 3:30. Not just that, do stay on with us. We'll be taking up all your queries, the social media questions answered by our experts right after this break.
Private equity is at a high, and we are getting private equity buying from private equity. So yes, that's an interesting trend that I think will stay. Indian industry has remained very domestic in its orientation, barring maybe IT, pharma, and a couple of the areas like auto ancillaries. We have a long ways to go. We can recover our ground in the whole healthcare space, in textiles, and tourism. If you think of it as an export generator or foreign exchange generator, India is pathetic in terms of what we're doing there. And I think these are the areas which could bring us jobs, which can bring investment. And the good news is we are seeing much more hotel investment. We just have to make sure the tourists come.
And then it's gas. Those are the two themes this market's running very, very strong on today. Almost every single power stock is moving to the highs of the day. And then gas stocks like Gas Authority of India, GAIL, 4% up. Phenomenal moves coming in. Those were the big ones on Tata Power. KEC, you name it, transformers and rectifiers, anything in power is up and about today. And of course, gas has been a big theme. Sandeep Agle with us. Sandeep, what are your trades?
Afternoon, Surabhi. I would go with a buy in a Muthoot Finance, stop loss of 513, target of 540. And a buy in a KPIT Tech, stop loss 115, target 132.
Okay, Sandeep, thanks a lot for those trading ideas. Well, let's discuss our next stock 360, and that's JSW Energy, a stock in F&O ban, but it's seen a big rally of late. Anisha, tell us.
Well, yes, Anuj, actually the stock had underperformed earlier in the year given the fact that FY17 was really a weak year for the company and because of the lack of additional triggers as well. But now we see them happening. For example, with the Q1 results, the company announced their foray into the electric vehicle business. In the AGM, they talked about investing around 4,000 crore rupees as far as the business is concerned. And also recently, we have heard comments coming in from the government saying and talking about the push towards the electric vehicles really. So that's the key trigger why the stock is moving higher. Other than that, Vijayawada plant has been a cash cow for them historically, but of late it was lagging due to the lack of any PPAs. If that comes in through, that can be an additional trigger as well. Also, the company is trying to change their coal mix and maintain their margins at a healthy level and move towards the domestic coal actually, and that should also help them going forward. Lastly, we are talking about the merchant rates going up. Remember, for JSW Energy, a decent part of the entire business is in terms of merchant sales. So if that goes up, that is also beneficial to them. But on the flip side, there are challenges as well. Of course, the performance in the last few quarters has been really weak. There have been no long-term PPAs that we have heard of. In fact, it's once bitten, twice shy for JSW Energy last year as well. They had entered into a PPA, but that never materialized. So that remains a pain point for them. Imported coal prices continue to remain elevated, so since they are trying to move it to domestic, they might be able to mitigate it, but as of now, this remains a challenge. Other than that, the balance sheet health also very recently has deteriorated a bit. If you look at the net debt to equity ratio, that has come to around 1.3 times. And given the fact that they're now going into the electric business, which would involve additional investment, because the cash as of now is pretty low at around 800 crores versus the investment that they're planning of around 4,000 crores, that means more pressure coming on the balance sheet. And also their long impending and long delayed acquisitions are also adding up to the balance sheet because they have given advances for that and those acquisitions are getting delayed. Valuation wise, if you look at it, 10-15 below 10-15 rupees below the current market price would have been a very good entry point, because I was going through a lot of brokerages. Their targets usually are anywhere between 50 to 60 rupees, lowest being around 47, the highest being 85, that was Ambit. But other than that, the usual is around 60 to 70. Even if you look and compare it to the peers, NTPC, which has a very regulated business, trades at around 1.3. Currently, if you look at JSW Energy, it is trading at 1.1. Yes, a bit discount if you look at with the likes of CSC, but for that we have demerger as the impending trigger really. Tata Power also around 1.2, so maybe the upside is a bit limited at current levels. Back to you.
Okay, all right, Anisha, thank you so much for that. Amrish, your thoughts on JSW Energy? Obviously, I guess the immediate, big excitement seems to be this whole EV business.
Right.
How do you rate the overall picture?
No, I think that's a very positive development because, as compared to the other players in that sector, when I talk of the sector, I'm talking of the auto sector. Even before they start really talking about the EV vehicles, other than I think Mahindra & Mahindra and Ashok Leyland to a certain extent, no one else is really talking of EV vehicles. But someone from outside the segment is talking of EV vehicles and going ahead with that, I think is a very positive development.
Okay, some news on DLF. They've got environmental clearance for 240 crore commercial project in Goa. That's a stock which has done well. But the stock that's surging, in fact, we spoke about Adani Power, but Adani Enterprises as well. Let's just pull out the intraday chart of Adani Enterprises. That stock has seen a big intraday surge. Adani Transmission as well, by the way, that's up about 10%, but Adani Enterprises up about 2.5%, but that big surge coming in late trade. Mr. Tulsian, thoughts on these two stocks which are making a big move? DLF, of course, driven by the news, and Adani Enterprises, where I believe you have a positive view.
Anuj, I think for DLF it's a small news, 240 crore commercial project in Goa. I don't think that that's very significant looking to the size of the company. But yes, amongst Adani Enterprise, Adani Transmission having positive on both, but we are more positive on Adani Transmission because as a while back I've said that the T&D space is really looking extremely well, and Adani Transmission is one of the largest amongst the private sector, and you can place them in the category of power grid kind of stocks. So having more positive view on Adani Transmission, but having positive view on Adani Enterprise as well.
Mr. Tulsian, I mean, today this whole power frenzy is such that even renewable stocks are getting bid up. I'm seeing Inox move higher. Suzlon is finding some takers today. Any thoughts here? We know the issues with these companies and the way the tariffs fell. What's the call now?
No, amongst the renewal also, I have been keeping my low profile or, maybe neutral to negative stance on the wind energy, because I don't think that the kind of response, for the capacity additions is seen more in case of solar rather than wind. So you have mentioned about Inox and Suzlon, both are in the wind space only. So I won't be keeping a positive stance on both. But yes, among the solar space, we have been recommending few of the stocks, maybe like Swelect Energy or maybe Web Solar Energy. So they are looking good amongst the solar space rather than the wind space in the renewable. Yeah.
Okay, Ashwani, technically your thoughts on Adani Group? I mean, would you buy an Adani Enterprises or an Adani Power at current price?
See, it's like walking in a pit full of snakes, and you don't know what will hit you from where. So Adani Enterprise was a good buy at 105, but at 133, 140, if anything hits you, you'll be back to 100. So I don't go by charts. I go by the number of times it's gone up to 140 and then collapsed back because of news. Well, if you want to take the risk, keep a stop say around 125. And then maybe play for 150, but these are not my type of stocks.
Okay, let's move on now and take on some queries coming in on social media. Chirag has 400 shares of IDBI Bank at 85 rupees. He wants to know the way forward. Ashwani, thoughts on this one?
See, you need to exit this and maybe get into a Capital First. IDBI Bank is not going anywhere, and Capital First fresh breakout today. I think at some point you'll get 950 to 1,000 on Capital First.
Okay, so that is a switch out recommended. We have another query from a Twitter user who has 3,000 shares of PTC Financial. Buy price is 38, so he's made some good money on PTC India Financial. He's a long-term investor, can wait for another one whole year, wants to know what to do. Mr. Tulsian, I'll toss that to you. PTC Financial?
See, it's a gradual and consistent performer. If you really see the Q1 numbers, they have posted an EPS of 1.25, and maybe FY17 EPS was higher because of the 200 crore they have booked on the sale of the non-core, the core investment into their various finance projects. So they may be on a core operations, they'll keep showing an EPS of about 5 rupees, and if you go by those parameters, the stock is looking quite cheap, maybe with a view of about 1 year. But I have been, taking a positive view on the holding company of this PTC India Financial Services, that is PTC India, which holds about 65% in PTC India Financial Services, where the query has come. So maybe if we take a view and take shift from the financial services to PTC India, that will be a better migration from a capital appreciation point of view. But if he wants to remain invested, I don't think that even PTC India Financial Services is a bad stock to hold for 1 year.
Okay, next one. Ramesh has 100 shares of Bajaj Finance at 1595 rupees. In the money, of course, but Ashwani wants to know if we can add more.
Well, can add on another 50, and as the stock keeps on moving up, go on adding. That is, one way of building positions. You need not always add on decline, but add only 50%, because if you add too much, then you can get into trouble. I think 24,500 should easily happen here.
Okay, gentlemen, on that note, we'll take a quick break. We'll come back on the other side, get you some BTST or STBT ideas.
Well, the stock that's having a real strong home run now is Divi's Labs. Looks like the market's getting some positive vibes about the inspection that's going on, because just look at that building on further. So that stock is moving to the high point of the day for now. But let's get some BTST calls. Ashwini and Mitesh back for that. Ashwini, thoughts first on Divi's Labs and, of course, your BTST calls?
Well, it appears that Divi's Lab has bottomed out just about on a technical basis. And I think once we can trade, say, above the 780, 800 type of zone, I think a rally right up to 1100 from where it started collapsing may not be out of question. So for the moment, it looks positive. It's closing above its 200-day moving average. So if you are a pharma type of investor, this is the right time to get into Divi's.
Okay, then. This is the BTST calls.
See, on BTST, Sundaram Fastener is a buy with a stop of 460, target of 485. BPCL is a buy with a stop of 525, target of 550. And Capital First is a buy with a stop of 800, target of 835.
Okay, what momentum picking up in the market right now. The Nifty at almost 10,090, and even something like a JP Associates, which was sulking all through the day, it's suddenly done this pole vault. So we'll get to Mitesh's calls in just a bit, but Arun, your thoughts? I mean, this market's moving to a different orbit, is it?
I mean, I think the breakout sort of got confirmed with, the first dip getting bought in the morning, Surabhi, and after that it's been just relentless. I think today, as we discussed, today probably is even better than yesterday, because today intraday you have just built on, and if you compare the intraday chart of the Nifty and the Bank Nifty, you will notice that today wider. I mean, just look at intraday chart of HDFC, TCS, HDFC Limited, that is, TCS, Reliance is making a move, Larsen and Toubro has been a big mover for the market, Tata Motors is making a move. So yesterday was all about IndusInd Bank and the impact on the Bank Nifty. Today it's pure Nifty breakout that you're seeing.
Strong afternoon. Mitesh, what are you working with? Sticking to buys as we close out?
Trading on the long side will be more rewarding. I have two BTST calls and I would like to add a third as well. Kotak Bank is a BTST with a stop at 1011 for targets of 1040. Adani Enterprises, I think we were just discussing the stock. That's a BTST as well. Keep a target of 131 and look for a 139, 140 kind of a level tomorrow. And Bharat Forge has just made a fresh 52-week high, a good swing breakout. So that's a buy with a stop at 1210 for targets of 1265.
Okay, Ashwini, your thoughts on the Nifty move? Is it now headed back towards the all-time highs?
I think we are 50 points away, so that seems to be a logical conclusion. But the good thing is that the market is not narrowing as it moves up. Often you'll see that only 5 stocks are taking it higher, etc. Today's reluctance of Bank Nifty shows that there are other horses also which can take the Nifty higher. So I would think that you will probably cross 10,150 and possibly even go higher.
Okay, Mr. Tilson, your thoughts on the breakout that we have seen in general going forward? Do you get a sense that the Nifty could see newer all-time highs or higher all-time highs going forward in the last quarter?
See, Anuj, when the series started, we gave a view that yes, and always, if you really see, September is always the better series as against October. Generally, you see the weakness in first half of October. And secondly, because of the advanced tax numbers, which we will be seeing by 15 September, that is always seen, that are expected to be seen good. And in fact, we expected when the series started a level of 10,200 for Nifty, but I think that is likely to get achieved much earlier, and maybe I won't be surprised to see it moving to 10,300 as well. So yes, keeping a positive stance on the market for September series.
What a move on a whole clutch of stocks. Throw in a Sanghi Industries. We've been talking about overall how cement stocks have done so well. Lots of moves coming through. Mr. Tulsian, the other pocket of the market that's been so active is gas because of this renegotiation from Australia. Is there anything still left to play on an IGL, on GAIL, or even some of the people who are off-taking from Petronet or Petronet itself?
See, I think Mahanagar Gas looks in extremely good stocks because if you take a comparative valuation with IGL, both have exactly the same model, and I think on the earning fronts, Mahanagar Gas will be able to post an EPS of closer to about 56 rupees for FY18, having already posted an EPS of 12 rupees 60 paisa for Q1. So we have been keeping a quite bullish view on Mahanagar Gas Limited. In fact, there is a general overall positive view on maybe stocks like GSPL, IGL, but the preference goes more for Mahanagar Gas Limited.
Okay, Mahanagar Gas is the pick from Mr. Tulsian. Mr. Tulsian, thanks a lot for your time today. A lot of stocks moving to high point. Hindustan Unilever, Nestle. Amrish, any stock that you would want to buy in this space?
No, in fact, we just suggested Vatek Wabag today.
Okay.
Again, with Mr. Gadkari taking charge of the Ganga Action Plan, again, there could be a decent flow of orders from there because in the last 2 or 3 years, nothing much had happened. So, one of the major beneficiaries would be Vatek Wabag, which anyway has a decent number of orders overseas as well as domestic orders, but this will be a much bigger addition. So, I think at these levels, since we have seen a good correction from those 720, 730 levels, it's come down to about 620. So, at these levels, I think the downside is limited, whereas I think we can see a decent upside. At the same time, I have been recommending cement stocks. We have picked up Ultratech, JK Lakshmi, Ambuja. And I think all these have done decently well, but still I think there's a decent amount of upside. And as far as the consumer is concerned, like I've told you earlier also, Imami, Dabur has been on our buy list. ITC, after this decent correction, I think is worth picking up.
Okay, a couple of ideas there coming in from Amrish. What a charge today on this market. 10,100, almost there. Sun Pharma, 4% up. Aurobindo, 2.5% up. Just turned out to be such an afternoon. I don't know, Anuj, could it be the day when we finally see some concrete FII buying return? Is it looking like that kind of a day as far as cash goes?
You know, the problem with taking that assumption is that, it's not a 1 or 2 day selling that we have seen, and there's no... in the morning we were discussing that CLSA report that, earnings growth could pick up in September.
And Arvind Sanger actually backed that view.
Exactly. And, CLSA is a very influential brokerage. So, especially with the FIIs. So, I don't know. I would like to see maybe some FII buying. The issue is that generally on days when you've seen such big moves, FIIs actually use that to actually sell more because, the issue is FIIs don't have India as the only market. And India is not the market. Yes, Indian market has done well, but India is not the only market which has done well. There are markets like Brazil and Russia, Surbi, and some of these markets have done phenomenally better than India and which are also as liquid, in fact, in certain cases, more liquid than our market. So, not necessary that you will see buying, it could happen, but I think today the market is latching on to that point that CLSA made in the morning as well, that we could have double-digit earnings growth in September quarter. That's really the only piece of news which is missing in this market because liquidity is there. The only piece which is missing is whether earnings pick up or not.
Earnings. Okay, on that note, let's get to Nimesh, who keeps a very close tab on the street. Nimesh, who's buying today?
Hi, Surbi. So at least, the feedback is the FIs are not biased. So that doesn't look like, that they are going to come so soon and buy the Indian markets. But yes, there is a lot of domestic liquidity which is chasing the markets now. So, there is no stopping to this market, so to speak. And that's been the trend for the last many days, In fact, for the last few days, I'm constantly getting a feedback that maybe, now there is a breakout on the cards, both on Nifty and for the mid-cap and small cap as well. And that seems to be the play out for the last few days, and that seems to be the day today as well. So, that's been the clear feedback for the last many days, and no difference today as well. But, for change today, a lot of the laggards stocks are rallying in trade. So, within the sectors, real estate stocks are buzzing. The pharma stocks have seen some bit of a comeback. A lot of the other underperformers, so to speak, have seen some bit of rally in today's state. So, it's not linear in that sense. Even in the mid-cap and small cap, there are some underperformances as well today. So it's basically a churn happening from the retail and HNI category, from the booking some bit of profit in the stocks which have run up and now looking to buy into the laggard space. So the PSU banks, those stocks are buzzing in trade today. But clearly from a tactical point of view, the feedback is for the last many days that it looks like it's good to be in the mid-cap and small-cap, at least in the time being, because there is so much of domestic liquidity which is chasing this momentum. But one word on the earnings, even at the conference when I met a lot of fund managers, for many sectors and stocks, even FY19 earnings are priced in at current levels. So even if there is a bit of a pickup in the September earnings quarter, it doesn't look like it's going to be a huge benefit or a huge fillip for the markets. It may just comfort the sentiment, but frankly, I guess today, right now what is happening is it's just chasing momentum, and there is so much of domestic liquidity which is chasing mid-cap and small-cap. So that's clearly playing out. But still, I'm getting a sense that there is still no big buying coming in. So maybe even in today's trade, probably see a bit of a sell figure from the FIs.
Okay, we'll watch for that figure release very, very carefully at around 6:30, whenever that number comes out. Thanks, Amesh, so much for that. Speaking of what institutions are doing, here's an interesting voice. DSP BlackRock's very successful micro-cap fund completes 10 years, during which its assets under management grew from 300 crores to 6,000 crores, one of the best-performing funds on the street. We caught up with the man who manages all that money, Vineet Sambre, got his views on, what's latest on his radar, what is he looking at buying, what he likes in this market, and of course valuations. Take a look.
Yes, it has been a phenomenal run for microcap, and I think the credit goes to our ability to identify companies ahead of the time and have faith in those companies, invest for long term. And I think that has been the success mantra. And if you ask me, be it microcap, small cap, I think these are companies where the base is small. And if we go with the right set of companies, their ability to grow at a rate higher than the companies in the large cap space is much better. And hence the ability to outperform the large cap probably in a span of 3 to 4 years is much higher. And hence my firm belief is that this category continues to have virtue. Only thing is that investors should have the ability to exercise patience and invest with the long term in mind.
How are you looking at the kind of stocks available? Is there an opportunity or is it too tough?
I think in terms of opportunities, definitely the opportunities, what we used to get, let's say 3 years back, 2 years back, in terms of the number of companies and at the valuation at which they were, those have come off. We find good businesses, we find good companies, great companies are there to invest, but in terms of the valuations, are we comfortable on some of them or many of them? We are not. And when we say valuations, it is really to do with the 1 year framework in mind. But the moment you stretch these numbers to 2 or 3 years, I think it becomes comforting, which also in a way means that while we are looking at next 2 to 3 years to really realize gains from these companies, I think as investors who are invested into the fund, they should have the objectives in sync with what objectives we have, which is invest for a longer term or look at 2 to 3 year time horizon, by which time frame I think decent returns could be generated.
Now what are people running away from? Which should we be buying in distress?
No, so right now I think most of the businesses which are attractive to us, they are still not extremely cheap or reasonable on the valuation framework. What is cheap today is one which people are a bit scared also about. So let's say PSU banking space is one where people are scared in terms of whether the whole slippage issues or the gross NPA formation issues is over or not. We have pharmaceutical sector which is actually going through its own bit of an issue in terms of the US FDA clearance, in terms of the generic slowdown in the US market. There's a IT sector which is facing structural slowdown, and we understand why it is happening there. So I think these are segments which are in a way cheaper as compared to the rest of the market, but these are again universe where they have their own set of problem, and investors would want to seek more clarity before they would want to allocate more money to these segments.
Okay, I understand that microcap would always be a bottom-up stock because delight, but there are a couple of themes which have worked for you, and one of them which stands out for me, Vineet, is chemicals. Names like SRF, Naveen Fluorine, these kind of stocks doing well. Is there enough in terms of earnings growth here to deserve this kind of move going forward?
So I think in terms of what we've seen in the past 2-3 years, I think these companies have done phenomenally well in terms of the performance. And the way we are looking at this category is that when we meet the management, when we understand the whole paradigm of opportunity which is there for them, I think we still have a lot in place for these companies. These companies have made investment in the last 2 to 3 years in terms of the capital spends, which they had not done in the last 5 years, which only speaks volume about their confidence of the business which they are expecting to come through. And at the same time, we have the other macro factor, which is the China factor, which is becoming slightly uncompetitive in this category, especially in the specialized or specialty chemical basket. And hence, I think that is, to me, if you ask me, it is still everlasting. There is still scope of opportunity, and these companies are today under some slowdown. They are consolidating. The global agrochemical segment is under bit of a slowdown, but I think these are temporary in nature. And while we read some of these management's notes, I think they are alluding to the fact that the recovery is going to happen towards the end of this year. So I think this is a temporary slowdown for these companies, and I definitely feel the outlook for these companies is much better for the next 3 to 4 years. And also interestingly, some of these names are not also very expensive in terms of the valuation. So in a way, because they have got into some bit of a slowdown, the valuations also remain attractive relatively.
Market that almost every pocket is firing, including stocks like Tata Motors that have been the laggards for so long. Look at that move, 3.5% up on Tata Motors. And while on the subject, let's hear it from the man himself. And this is a CNBC exclusive. Jaguar Land Rover is talking about the plans of the company to electrify its fleet. We have the MD and CEO saying that all the products will have the option of being electrified by 2020.
Now, whenever you calculate it through the day, according to today's knowledge, it's quite clear the future will be electric. And therefore, also, we are going to deliver step by step a complete electrified portfolio. And from 2020 onwards, all of our cars will deliver the option to be electrified. So plug-in hybrids or mild hybrids and or battery electric vehicles. And we are ahead with a battery electric vehicle with the I-Pace.
Let us look at the battery aspect of things. I think that will be probably the bottleneck for the industry. So what are your plans here? Are you already investing heavily in battery factories as well?
Batteries are still the Achilles heel. Nevertheless, we see a very good development. We see that the prices are going down around about 10 to 12% per year. And in addition, we see simultaneously that the density or the capacity is going up. And so, yes, we need batteries, we need the battery packs, and we have to think about the cells which are and the chemistry of the overall battery.
But how confident are you that you actually get the reach, like 500 plus kilometers on a battery car, like sooner than later?
We're going to offer the I-Pace already next year. And this vehicle, we have already this range of around about 500 kilometers.
Many car makers are saying that for like a huge sales effort for e-cars, like electrified cars, what is needed is the infrastructure that you could also load these cars. So what are the plans here?
At the end of the day, it needs a collaboration in between the energy market, government, and quite clear also the OEMs. But I'm absolutely confident we will see battery cars faster than anybody expected on the street, and therefore also the infrastructure will catch up.
Let us look at a big topic as well, quite important for you, Brexit. What concerns you most when we talk about a potential hard Brexit of the UK when it comes to your company?
Jaguar Land Rover buys around about 40% of the bill of materials in continental Europe. On the other hand, continental Europe is a very big market for us. Therefore, we rely on free and fair trade. And I hope, and on the other hand also trust, that the politicians find the right way, by the way, on both sides of the channel, to prosper their population.
Just quickly, are you concerned about more pound volatility for your earnings?
At the end of the day, we have seen it, experienced it already today.
Okay, then that's a big move on Tata Motors. I think the market likes what the JLR CEO was saying, especially about the electric portfolio by 2020, because JLR margin has been an issue. He is expecting battery prices to come down, and that could be a big trigger going forward, or possibly a trigger for Tata Motors. Ashwini, not the best of the stocks, of course, trend-wise, but thoughts on Tata Motors?
I think it's still too early to say that it's bottomed out, etc. I think it needs to make a large base before you get ready to buy. Possibly needs to, cross above, the 425, 430 zone, which remained a support for a long time, and from where it broke down. So once we can get above that, then possibly some more upside could be available. But right now, it's fairly sporadic type of moves.
Okay, let's actually bring in Prashant Prabhakaran into the conversation as well. He's Senior President and CEO at Yes Securities. Prashant, thanks for joining in. I want to get your views on this mega power rally that's literally come out of nowhere. I mean, maybe it's the fact that spot power rates, merchant rates have risen to 5. But everything is moving up, whether it's an Adani Power, whether it's an NTPC, whether it's the renewable plays. Are you buying anything?
There are no recommendations from our desk at this point of time. But the fact remains that government has made a lot of efforts to make sure that the balance sheet problems of most of the distributors and manufacturers are taken care of. The power bonds that they had ended up bringing and the talk about having an increase in tariff rates of at some point of time had to hit a sector which has been badly plagued by both the fact that their balance sheets were bleeding, you're not able to collect money, etc. So finally, in a market when valuations are at a peak, the liquidity is finding its areas into places where there is some amount of optimism that is getting built, stories for the future getting built. Right now, if you end up asking me, is there a structural change that has happened in the way business happens in the power business? I don't think so. But the future, maybe in the next couple of years when there are more reforms, there will be a story that will play out, but not at this point of time.
Okay, Prashant, good afternoon. So what ideas are you pushing at this point in time?
So we are ourselves finding it tough to find it, but a couple of things that we like is the auto ancillary space. There's Supradeep Engineering that we have ended up looking at, a company which has managed to end up having 2 large acquisitions, the Phoenix Lamps and the Westcom Controls that is there. It is looking at a growth which is large, and it is our assumption is that they'll add another 10% market share in the Honda business that they control in the two-wheeler space. It is a new story that we have ended up looking at. It has been in our radar for quite some time and it has done well. It's a story which will pan out over the next 1 year. So that's one. The Finolux Industries story continues to rock along for us thanks to the agri story that government has been pushing in large. 2 stories that we have been looking at and have brought reports out for.
Okay. Ashwini, the tires are at it again. JK 5%, Apollo 3%. Maybe we can get MRF up on the screen as well. So rolling along. But is there any kind of a trade here? Yeah, CEAT as well, 2% up.
See, anytime the market restarts its rally, the market leading groups tend to lead that. So I think most of these stocks were in correction last few days. All of them are now beginning to move up. I think CEAT, Apollo, MRF, everything can be bought, and there should be more upside because this time these stocks have corrected substantially.
Okay, Mitesh, your thoughts on a couple of these stocks which have made a big move, HPCL and Ashok Leyland?
See, Ashok Leyland is something which I like a lot. I think that's clearly a stock which has been in a buy mode for the last few days, and I think it's heading towards 125, 130 zone and maybe even higher. But that would be a good working target for people who are trading. HPCL, I think after a correction, it's managed to bounce back. I'm not very keen to buy this one. I think, between HPCL and BPCL, I've always preferred BPCL. And again, I think for the time being, My chart readings are slightly stronger there. So if I am to buy a leading OMC, I think it will be BPCL with a stop at 517.
Some interesting laggards today. Bajaj Finance, when you can't fault it really, can you, for just about a 1.5% decline, but it's choosing to sit out in today's action. And IndusInd Bank is now down almost 3%. The deal, Prashant, good or bad for IndusInd Bank?
Unfortunately, our view in the microfinance space hasn't been too positive. The business of lending money without having due strength in the balance sheet of having returns is an area that we have been uncomfortable with quite some time. So a business which we are not able to gauge, considering the fact that there could be an entry of political intervention to trying to appease people of the area, the segment that they lend in is a segment which is questionable. The same crisis that arose at some point of time in US can unfold in this area at any point of time. So it's an area that we have not been comfortable with. So frankly speaking, the merger by itself might have a drag on the IndusInd, though it will have a short-term impact of the prices because of having a large portion of the balance sheet getting augmented by the already existing business of Bharat Financial. The business by itself doesn't make sense for us. IndusInd is growing well in the space that it has already chosen with. It has been a consistent performer as far as revenues is concerned. The reason for it to go and club itself in, it's a question mark for us at this point of time.
Okay, Amrish, before we thank you, I just wanted your thoughts on the kind of surge that we have seen in oil marketing companies.
Because if you look at the petrol prices, I mean, from the days they started the daily increase or decrease, I mean, every day they have raised prices, and already I think it's moved up from what? In Bombay, it has moved up from what? 73 to 80. I mean, any other time, even if there was a 2-3 rupee hike, it would have made a big news. And if you see in the last 2 months, it's not made any news at all. So clearly, this I mean adds to the bottom line, no doubt, because I don't think the fluctuation in the oil prices nor the forex, has been that high. So I think it clearly adds to the bottom line to a large extent. So I think this rally in these counters should continue for a while longer.
Mitesh, as we're getting down to the close, your takeaway from the action today and the most convincing trade for you as we look at tomorrow?
See, it's difficult to pick one. I think, typically as a trader, pick 4 or 5 and then look at 3 or 4 of them working out well. But yeah, I think, see, the good thing is that, a lot of stocks, the breadth has been much better than what we had seen yesterday. And my sense that I think that, that should add to the strength. So today, if I was to look at stocks which are starting new uptrends, I think, that will be Capital First breaking into all-time highs, ACC breaking into all-time highs. Exide, I think, is showing signs of a short to medium-term uptrend. So I think these are the stocks where you will focus upon. Apart from the fact that you would want to buy NBFCs when they give a pullback to their 20-day average, 25-day average, etc.
Okay, getting ready for close. Shall we call it a terrific Tuesday? I don't want to be jubilant, Anuj, but I don't know. Can you really complain with this 80-point move at all?
We are almost at all-time closing high. Yeah. It is terrific Tuesday, so there'll be absolutely no doubt about that. I mean, just look at the cash market volumes. 28,000 crores of cash market volume. I don't think we're talking about bulk deals or block deals here. Cash market volumes of 28,000 crore. I think I'll be watching out for the delivery numbers of some of the real large ones very closely, because where's this kind of buying really coming in from? And I'm just looking at some data, just trying to get some sense of where you would have seen maximum buying impact. Even something like an Infosys made a big move in today's trade actually. HDFC, Tata Steel, ITC made a huge move actually. That stock really helped the markets. Tata Motors made a move back to 390 on that stock. TCS, Mahindra and Mahindra. Interesting that if you talk about the top 10 or 15 gainers, there's absolutely no banking name. Yes, Australia, Bank of Baroda, but that does not have any impact on the market in terms of index contribution. I think you'll have to go to number 14, Kotak Mahindra Bank, with 1.5% gain. So it's telling you the kind of rally that you've had in today's trade. BPCL, GAIL, phenomenal move on GAIL over the last few days. On the way down, IndusInd Bank actually corrected today, down about 3%. That was the only notable loser, maybe a Wipro as well. But really, 10,087 on the Nifty. phenomenal move, up about 0.8%, and once again a new lifetime high for mid-cap index.
Oh yes, and lots of names to track over there. Lots of momentum. So let's actually start off with tire stocks. Most of them are CEAT, MRF, Apollo, JK. We're looking at gains between 3 to 5% on most of these names. A great day continuing for a JBM Auto, 12%. We start off with tire stocks. Most of them are CEAT, MRF, Apollo, JK. We're looking at gains between 3 to 5% on most of these names. A great day continuing for a JBM Auto, 12% up. The stock of the day, if you want to sort of pick up something from the mid-cap arena, was Divi's. Some positive expectations on their Unit 2. Liberty Shoes up throughout the session, as was Tata Coffee, because of some interesting buying emerging from certain known investors in the market. About 9-10% up on these stocks. A great day for cement pretty much across the board. So some of the names like Sanghi Industries really stand out. India Cement stands out beyond the index. So 8%. India was up about 4% last time I checked. NCC, some of the niche construction plays also had a good session today. NCC about 4% up. Limited real estate in bits and pieces. DLF had some good news on it, but stocks like Peninsula Land surging about 9% thereabouts. So not bad. Arvind Smart Spaces 11% up on this stock as well. Now let's come down to power, because power, everything was up and about. The Adani Group really takes the top honors. Adani Transmission, Adani Power. But it wasn't just that. Even a Reliance Power started moving higher. Reliance Infrastructure started moving higher. So, I mean, something with capital goods started, cyclicals rather, not just capital goods, started turning higher. KEC International, it's a long list out there. Suzlon, Inox Wind, even they managed to get bid up quite a bit. I'll name some of the large mid-caps to end with. Voltas, Bharat Forge. These stocks got some good buying traction as well. Capital First. Bajaj Finance chose to be a little somber on an otherwise a very, very good day for the street. Anuj.
In fact, it's the second highest close for the Nifty. It's 10,114 was the highest closing. That was on the 1st of August. After that, the market corrected to 97.10. Almost a 400-500 point correction is what we had. And from 97.10 all the way back to 10,100 now. So, Ashwini, it's been 1 month and 10 days now that, we've now reclaimed that 10,000 sort of mark on a closing basis, 10,100 thereabout. What next in terms of the Nifty move, and what next for the Bank Nifty, which sort of underperformed a bit today?
See, whenever the market starts to expand, you should let it expand and let it go, because every day you will find something wrong with the market. So the sense should be that now that it's breaking out, it's moving, even 50, 70, 80 points on a daily basis. A logical target is 10,150 minus 9,700. Just add 450 to 10,150 and maybe 10,500, 600. But obviously that will need, some news flow support as well. So for the moment, try to remain long. I think Bank Nifty probably had an off session today, but again, if IndusInd or Yes Bank, etc., they start moving strongly, it's clear that money is moving out of State Bank and ICICI Bank and going into these two. What's also changing is that Larsen, Siemens, ABB, these infra-stroke capital goods stocks are again picking up. They've picked up in the past and nothing has come out of it. But if this leg also starts to perform and the investment phase of the market starts, I think then the market can have another leg on the upside, because that will involve, credit growth and a lot of other things start firing instead of just consumption.
Oh, absolutely, Ashwini. Then it's going to be a market, 2.0, 3.0 maybe. It'll open up a whole new sort of set of topics to talk about. But Prasant, final thoughts, any fresh themes that have caught your fancy these days? Electric vehicles is quite a buzzword, and everybody's trying to find out themes, who's supplying, who's making certain electric component, who's getting into electric batteries. Have you picked up anything?
Not in that space of. In the Siemens space, actually, we had looked at Prison Siemens, a player which has actually underperformed for the last 4 or 5 years, but has seen traction because of affordable housing and infrastructure as a play in central India, which is there. So it's an area that we have looked up. It's a stock which our assumption is that against a 1% CAGR from 13 to around 17, FY 13 to FY 17, is going to practically have a 15% growth in the next couple of years based on the demand flow that is there from their side. It's a story which will unfold and which will get decent returns in that space. In the electric space, it's a story you'll have to wait, and for the car manufacturer, there is a transformation that all of the manufacturers, right from Bajaj to Tata Motors, have talked about. Even the government is talking about a 2030 target. So it's a long story, but it's definitely a story to look out for and end up tracking in that space.
Okay, all right, Prashant, Mitesh and Ashri, thanks so much for being with us and taking us through market close this Tuesday. Closing bell money control question of the day was, can FII selling, if FII selling continue, can mutual fund buying alone take the market to a new high? 62% of the respondents say yes. 38% say no. I wonder how that's going to be skewed or change after today's close, because this poll was on while the market was trading, of course.
Yes, but keep in mind, you know, the biggest run for the market came when FII selling was at the highest post demonetization, and that's when the real domestic money came in. And that actually, you know, for me remains the best part of this market, that after a long time, the domestic retail investors actually participated at the time of panic and actually bought at the lowest end of the market range, which really has been phenomenal. But our first respondent says the inflows in mutual funds for the past few quarters have been unprecedented. The money continues to move into mutual funds as fixed deposits and other assets are losing their sheen. If the trend continues for 2 more years, the maturity of Indian stock market will set new benchmark. I think that's a very valid point.
Okay, next reply is from RK Shah, Sharp One. He says FIIs are not fools to book profits at Nifty above 10,000 and the Sensex above 31,000. Okay, that's one view. To a CNBC TV18 exclusive, Chairman and MD of JSPL, Naveen Jindal, says the company is looking to reduce debt over the next 3 to 4 years. Speaking to Anshu Sharma, he confirmed the deal with JSW Energy for the Tanmar power plant being in progress. Take a look.
So firstly, coal availability is a very serious concern, both for steel sector and for power sector also, and that is why you're seeing the prices of power going up. So, but there were lots of issues, maybe due to rainfall, due to heavy rainfall, the Coal India could not produce as much as they were supposed to produce. But I hope that they are able to ramp up their production so that industry does not suffer, because people who have set up the plant in the hinterland, they are really dependent on Coal India. Coal India is a monopoly, so they really need to, you know, get their act together. They really need to increase their production so that the industry does not suffer on their account. And even once the availability improves, the industry will be able to perform better.
Okay. Do you think Uday has been able to get that demand for power, since we are seeing increase in power? There is surplus in power in India, but demand for power hasn't increased?
Well, demand for power is increasing every year, but still not that every place is being supplied power 24 hours. So I think today we have surplus capacities in India. So one is we need to be able to provide coal to them, and the distribution companies need to supply 24 hours supply, and whatever anomalies are there, I mean, they also must not, they also need to cut back on their losses, because the losses are huge. I mean, anywhere from 20% to 60% are the losses of different distribution companies, which are really not sustainable. So through Uday scheme, Shakti scheme, all these schemes are there, but obviously it takes time for their implementation. I hope they are implemented successfully, so that the transmission distribution losses come down, power availability is improved, and really people can have a quality of life, you know, have a better quality of life where they have 24-hour access to electricity.
If I can ask you, what are the debt levels at which JSPL is operating, and what are your target in terms of EBITDA per ton?
Well, our EBITDA per ton are second highest in steel in the country. But we hope, but the production needs to really increase, and we hope that, like I said, from December onwards, we will more than double our production at Angul, and our debt levels are at a manageable level. And going forward, we are looking at doing some divestments, and also through higher internal accruals, we are going to really concentrate on reducing the debt, and in the next 3-4 years, we want to be a relatively debt-free company.
Okay, moving on now to all the macro numbers that we are watching out for. These are important cues for tomorrow. IIP and CPI data is going to come out this evening, and we are expecting a slight uptick in consumer inflation. Ekta Batra has more details. Ekta?
Well, yes, absolutely. We are expecting the CPI data to harden this time round, a little over 3%, 3.2% is what our poll is indicating. This is basically going to be led primarily because of the food disinflation reducing. So remember that last month it was primarily led higher in terms of the food inflation, or rather the lower food disinflation that we saw, simply because of tomato prices. But this month it's expected to be led on by onion prices. So that's the reason why you're going to see that sort of hardening come through, and we're going to see household inflation sort of harden on a month-on-month basis as well. Now, coming to what we can expect in terms of core inflation is expected to possibly harden to over 4% on a month-on-month basis. IIP, on the other hand, is expected to also see some amount of reprieve, so it is expected to see a growth of over 1% this time, and this compares to the dismal decline that we saw the same time last month. And the reason for that is basically because of inventory restocking to take place. Remember that IIP comes out with a lag, so this IIP figure is going to be for the month of July as opposed to August. So the restocking from is expected to probably have a little bit of a positive impact in terms of the IIP figure this time. Remember, core sector was positive as well. It was a little over 2% this time round.
Okay, all right, Ekta, thank you so much for that. On that note, it's time for us to take a quick break. On the other side, Manisha Gupta joining in with all the currency and commodity market action.